Everyone, welcome back to Fast Stock Market News, where I give you all the news as fast as I can. So today the market was a bit of a up and down roller coaster day, guys. It's been pretty volatile all year for the past at least 8 to 9 months. But there were some key drivers that made the market go higher today and also made the market go lower. But overall, I'll be honest, all things considered, the market did show a lot of resilience, considering that it got some pretty dire news. It was kind of inevitable at this point, and I'll get to that at the end of the video. But stick around, guys, and have a look. So today we can see the S&P 500 finished negative 0.13% in the red. We also had the Dow finishing negative 0.15 in the red. Nasdaq also finishing same thing as Dow, and the Russell finishing lower at negative 0.22 in the red, and also crude oil going down a lot more. So the reason crude oil is kind of like it has kind of like entered in a bear market in itself. It's plunged over 20% over since its high, and it's currently right now as it stands it's considered to be in a bear market right now. So kind of the reason that crude oil is going down is because Biden called Congress to approve a 3-month gas tax holiday. So in other words, basically going to make gas a little bit cheaper for the next 3 months. Overall, families could expect, if you drive a regular car, you could see a savings of about 18 cents. If you drive a big rig, you could see a savings of about 24 cents on diesel. This basically would cost an estimated $10 billion, and a senior administration official told reporters on a call. But the big thing about this is, again, it has to go through Congress. We know how many loops we have to jump through right now, especially with an election year coming up. I'm not holding my breath for this, because anytime anything goes to Congress, it usually just dies in the Senate. So this is something that's like kind of making gas go a little bit lower. The potential of basically could see the gasoline go down lower. The thing that also crypto market was also getting hit, and the reason that crypto markets, if you guys are crypto investors, actually got hit was based on what happened. The biggest news, the biggest driver that caused the market to go down today, and that is basically Jerome Powell basically embracing. He was testifying in front of Congress today, and he's basically come to the realization that the recession is a possibility. And I have a clip for you. At the moment, this is when the market started to drop. Have a listen, guys.
The longer run neutral level of the federal funds rate to be in around 2.5%, and actually we think it will be appropriate to raise rates above a neutral level into a modestly restrictive level, because this is very high inflation and it's hurting everybody, and we need to do our job and get inflation back on a path down to 2%. And the way we're going to do that, we think, is raise rates, of course, to that level. Of course, everything depends on the data that we see. We're going to be we're really strongly committed to getting inflation down to 2%, but we're going to be flexible as we see the data coming in.
Do you agree with the perspective, and then I'll be done, but do you agree with the perspective that if interest rates go too high, too fast, it could drive us into a recession?
It's certainly a possibility. It's not our intended outcome at all, but it's certainly a possibility. And frankly, the events of the last few months around the world have made it more difficult for us to achieve what we want, which is 2% inflation and still a strong labor market.
Guys, that's basically what kind of started to drive the market to go lower. But as I said at the start of the video, the market did show quite a bit of resilience despite that negative news. It kind of is that at this point we're in the realization we are in a recession, or we are going to a recession. And basically when Jerome Powell said that, it basically solidified everything, that the inevitable that was already written on the walls, that things that we were already aware of. So the market didn't react to it too negatively. If this would have been any other day of the week before we even knew recession was a possibility, you could have seen the market tank like 3 or 4%. So in that sense, it was resilient. But still, regardless, guys, I am still holding about 70% cash. I haven't really DCA'd right now, unless it's like it gets hit 3 or 4%. An index, then I'll start putting some money in there. But for right now, I'm still DCAing. That's the news for the day, guys. And I thank you again for watching, and I'll see you again tomorrow. Take care. Thanks again, everyone, for watching Fast Stock Market News. If you enjoyed the video, consider subscribing, commenting, or liking the video. I would greatly appreciate it. My name is Gio, and I'll see you tomorrow, guys. Take care.